Paul, 2018 was a really tough year for emerging markets after what was a relatively strong 2017. So what changed this year?
Yeah, I think the key theme in 2018 has been the withdrawal of global liquidity. We've seen the Federal Reserve hike interest rates. We've seen a removal of stimulus to the global economy. And that has caused a slowdown in emerging market growth. And at the same time, we've also seen an escalation of trade tensions between the US and China. And global trade is very important for emerging market growth.
Of course, the other thing that impacts on emerging markets is the US dollar. Why does that matter?
So a stronger US dollar typically means that the financing costs for emerging markets in dollar debt get more expensive. It also damages the return prospects of local currency debt for emerging markets. And usually when we have a stronger dollar, we see a repatriation of capital away from emerging markets and back to the US. So overall, a stronger dollar is quite a challenge and headwind for the asset class.
So given that backdrop, what is the outlook for the asset class in 2019?
So most of the challenges and headwinds that the asset class faced in 2018 are still there. They haven't gone away. But one thing that has changed in the last 12 months is valuations. Currencies have depreciated significantly and the yields on emerging market bonds have risen dramatically. So the risk-reward profile for emerging markets now looks much more attractive than it did 12 months ago.
Now, you mentioned valuations, and it'd be interesting to find out which regions or countries you see the most value in.
Well, one country that we really like now is Argentina. It's been a very challenging year for the country. They've had to go to the IMF for financial support. They've had a big inflation problem. They've had to hike interest rates dramatically. The currency has depreciated significantly. But now at this point, we think the risk reward looks quite attractive. We think the currency looks quite cheap relative to some of its peers. And we think the bond yields look really attractive.
Another concern for investors will be the volatility of the oil price. What are your thoughts on that?
So this year, the higher oil price in 2018 has benefited some emerging market countries, notably places like Russia, for example. It's also been a challenge for other energy importers, such as Turkey and India. But I think overall, in aggregate, where the oil price is at the moment, it's beneficial for the whole asset class as an energy exporting asset class.
Paul, thanks so much.
Thank you.